Mic check, mic check. Headset adjusted now.
Oh my God, no, wonderful.
Should be good. Okay, let us begin. 5 minute chart. Let me start on a hourly chart at least. And then we can loop in gold as well. But let's wait for a second. Okay. So the last time I looked at Nasdaq was somewhere around 9 a.m. ish my time. Right, somewhere in here. So let's take a peek at what's happening since then. Or big picture. So first thing I'm seeing that's standing out to me is this little price leg right here. We have this little guy here interrupting the smoothness of the run up. So I'm gonna choose to start from the high and work my ways back to find the start of the expansion. So this close above this high, this close above this high, this close above this high. Closing price of this is what? 435. And then this high is 436. So negligible. But I like how this looks. So I'm gonna put that as my expansion range there. Since sometime yesterday, I think. And then that's all the price action I need. Now let's jump to time frames everybody loves. 15-minute charts. What do we have here? Pretty basic, standard. We stopped, we run up, and we broke back through here, and he popped back up, and it's showing evidence that it wants to die now. Just leaning off this time frame alone, we're getting all of this as your bullish order block. So now I'll just drop the M5 and then life can be easy. So the time is 1:43. So new M15 and new M5 starts in 2 minutes. So I will piggy most of my analysis off the open price of the next candle. Take a quick peek on gold. This is the analysis, the rough analysis I did on gold this morning, and nothing really changed about it. So gold is just bearish, pretty much. We go to the hourly chart. First thing that stands out on the hourly chart is going to be this big wick right here. So without thinking too much, we tag that level. And then as this is dropping, I'm not saying this is going to be the draw on liquidity, but that would be what I want to watch as price gets there. So yeah, pretty basic, clearly showing reason that it doesn't want to go higher. I figured once the open price of the week, it's a little bit weird on this candle if I remember correctly. Open is at 682 and then the close is at 691. feels weird. Okay. Open price of the week is right here. So I think yesterday I was buying and trusting the fact that once we got above here, it should explode higher. We just had a one big consolidation since then. So I chose to not trade today. Guys who are in the public Discord wouldn't have known that. But yeah, I chose to not participate in anything today. Everything looks consolidated and weird. So yeah, gold broke down on the list, blah, blah, blah. So now we have our starting point right here. So for all intents and purposes, we started our analysis right there. Let's take a look at what we have. We had M5 expansion lower, retrace, swept the high. This low is already swept as well. That's my drawn liquidity. It's my drawn liquidity because we expanded lower. We retraced, failed to close above here, expanded down again. Big FEG expansion protects the imbalance. FEG is intact, so now lower prices. So for context, I'll be expecting price to stay below this candle's open price. I can read that through a 1 minute chart now. So open price rejection, easiest way to read price. Sometimes when you're looking at live price action. So what's this saying? Kind of like classic bearish structure. So we have high, low, higher, high, lower, low, lower, high, lower, low, all that good stuff. The last time we dropped to lower hard was here. We retraced inside that. Failed to go higher here. So this FEG is worth noting. And now we're pushing here. So when you look at deliveries like this, when structure is just obvious, as in lower highs, lower lows setup, and swing points are correlating without overthinking, you want to see the market get below that. So now, if I was going to trade this, I'd be looking for one, since this is the quote unquote start of what I'm doing, I want this open price. I want to see us do this. Once these up candles close, two things gets me interested. One is closing below the open price of the up candles and that red line. So right now, a trade idea looks like this. Once it closes below red line and this open, you can start looking for something like that. If this, then that. If we don't get none of that, then entertaining that idea is madness. Okay. So already we've gotten a close above the FEG, which is not good for bearishness. But let us see. I have 2 minutes left. 1, 2, 3, 4. Well, 1 minute left. Let's see where the candles close. We don't make decisions until they close. Let's see. Bam, 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 bam. So this is raw, naked price action. If you were part of the call this morning, then you would have seen this. So let's talk about what this is saying right now. Last time Nasdaq was consolidating was here in the morning. Retraced, value area. Most of the transactions were done inside here. Rejected, displaced. This is also bearish. From a liquidity standpoint, we have a whole lot of liquidity below. So look at this in the market. Get down here. Down to what's that? 29,510. So now I have everything that supports bearishness. Just to find an entry that makes taking a risk worthwhile. And though I may not be participating, I'll still frame what I would do. So M1's a little bit noisy right now. Not anything jumping out at me that I need to participate in. I haven't closed below the line. First candle closed of the M5 and the M15. I'm looking here to see if there's anything worth retracing to. And I don't see anything here that I could say outside of this, like as a potential order block. I don't see anything here worth noting. It is 150, which means sneaking a little bit of macros in there. I want to see speed lower if we wick and reject this high. Okay, now that this high is taken, if we're going to be bearish, this is the last line of defense then, so to speak. So I'm going to treat this high the same way I would treat this open price here. Same criteria we wanted for selling here. I'm watching those criteria here. And this is going to tell me if I can fade the move with time rather than like more candle confirmation. So first confirmation met, we close below. Speed now, once it start going lower. If I'm aggressive, that's a short right there. Can't I use, I think I can use paper trading. So, let's go 5 sell at market. My entry price is 593. So stop loss goes to 603. And then target can be there, but I'm gonna put it all the way down here. About here. Confirm that. Let me capture that. Okay, so yes, all the confirmations that we wanted for lower prices should come here. This is me again sneaking a little bit of macros into this, anticipating that based on the time this is happening, we could get a bearish fractal. And I'm leaning on, since this is a down candle, price closing below here, that strengthens the idea that this is a bearish macro, in my humble opinion. Which is why the stop is pretty tight, because in the event that it's wrong, even though it's paper, I'm not going to be babysitting the idea itself. So 6 seconds to see if we can close below here. This candle's low. Didn't close. Not so confident about whether this is doing what it should now. But M5 candle is not closed yet. I'll give it 1 more minute. So now my focus moves away from that high. And I'm just interested in seeing that low. I think that's the marker for speed. Once that low is taken and all the run up started here in this M5 candle, same reading. And of course, if it fails, then we can consider that we're not getting what what supports the idea. So a trade like this, if this was on a live account, a trade like this for me, I'd one size down first thing. So even though it's demo or paper, the first thing I did when I opened up the trading panel was cut the size. Because if I was trading live, that's the first thing I would do, knowing that I didn't get the confirmation to close here. Second thing, I'm not waiting a million years to know that I'm wrong. I'm giving the stop 10 points. About that, I think. 10 points. If I'm wrong, I can live with a 10-point loss. But yeah, none of the things that I believe confirm lower prices are being printed. So this doing this, not that appealing. Right, that's a stop out. So yeah, all the things that I wanted to support bearishness here didn't print. Let's take a look at gold. Yeah. Still nothing here is like overly crazy or anything. But no worries, no worries. I wonder if this is another one of those days where Nasdaq winning trading strategies to buy until you're wrong. Keep buying until you're wrong. Either way, I chose to not trade today because I didn't think it was gonna be a easy day. The short this morning did look easy. This short did look very, very easy. But anyway, let's take a look at where the liquidity is right now. I see sell side liquidity all the way up here, on top sell side liquidity, but I'm not a fan of the buying until you're wrong strategy. So I am going to choose to look at the low of all these red candles, which overlaps with this low. The time is irrelevant, just trying to find a straight line here. So for simplicity, right about there is the low of all of this. Let's take a look again. I find it so weird that even looking at this, I still can't see a reason to be a buyer. I can't see anything. All I can see is the short opportunity is not like A plus yet. Everything else, clear bearishness. Clear bearishness. But let me not fight it and wait for the next setup. So last minute of the hour is here now. By the way, I drew this FPG here because it looks like a balanced price range. One FEG up, one FEG down, overlap. Okay, so you didn't see that. So this is the closest level to price that I would look at for a close below to support bearishness. Devil's advocate, if I was going to be a buyer because the bearish confirmations are not being confirmed, what would I do? I'd look for a break and close above the BPR. And then when it retraces to one of these down candles, I'd look for a long. So if I'm looking at that for entry, the most logical question I'd want to ask myself is, how do I frame a stop? Framing a stop. I'm looking at this high here. We came back here. So when I anticipated bearishness, then we dropped through, then it pushed pretty fast away from here. So if I'm looking for a stop, one of the first things I want to think about is if it's coming back down to this high and we just rejected this high and continue up, would the bearish idea still be wrong? Would the bullish idea still be wrong? And I'd say if we're rejecting these old highs here, I'd still be bullish because we wouldn't have broken back down inside here. So if I'm going to get an entry, I'd have to first think about my stop going somewhere below here, below this old high. So playing devil's advocate, this could have been that buy if I was looking for bullishness. It would have been an early entry because we hadn't closed through the breakaway gap. But for right now, while I'm watching, I'm going to give this at least one M5 candle. So here, give us about one M5 candle to try to reach into here, since I saw that some liquidity. Oh, it's actually very, very far away. Oops, my bad. My bad, my bad. Wait a minute. I clicked the wrong thing. I don't know. How do I get out of this? There it is. Sorry. I was clicking this. There we go. There we go. There we go. Okay. So now it's above the M5 breakaway gap. Candle hasn't closed yet. So now I'm watching to see how we print here. If we are looking at this specific M5 candles open, then below here and a close is CSD. But because it's showing willingness to get above this, I don't want to rush to make any decisions, specifically before this M5 candle closes. Something about this structure looks like a nice market maker sell model. It's very nice. So while I'm devil's advocate and I'm looking at both buys and sells here, I'm leaning on bearishness heavily. So I'm looking to see if we get at least a close below here, like a strong close. And then, what's it called again? So low risk sell. My bad. Old age catching up. So this M5 open, this is the one that popped up above the BPR. Still haven't closed yet. I'm watching to see how we trade here. And that could be what I need to be short again. So last minute. Obviously, since we're now above the FEG, we're back inside it. We're watching how it trades at equilibrium. We're watching these old highs again. Because when you break highs with FEGs, you generally think breakaway gaps. So we could even move this to here and say, since we broke that high with a big candle, if we're bullish, this is going to hold. So far, no bodies have closed below it. So fine with that. 16 seconds to see if it can close below here to invalidate the breakaway gap. And then this closing below here will do two things. Support the idea that we can short, as well as show that we're not closing above the BPR from all the way over here. Now this candle is closed, and I think we just close above the BPR. I wouldn't be looking to jump into a sell right now. Breakaway gap for upside is going. If I was, again, devil's advocate and trying to buy this would beg me to put my stop here. But personally, I don't think a stop here is safe. It's just buy and pray that it continues strategy. And I'm not a fan. But nonetheless, if it continues to push and fails to break down, then I'll continue to look for the liquidity pool that the indicator suggested, which could be all the way up here. And if it's slow, then it might be long and boring. Let me see if I can. So liquidity starts at 660 and higher. So while this may be a little bit of a bad habit to show commitment to the rules, this is 604, so this is less than 20 points. So if we dip back down into here, I'm in the frame, long setup, put my stop here nonetheless, keep the size reduced, and let it play. There. TP. So I'm against any kind of buying here, but for the sake of rules, I'm going to show you how I could participate in a buy here, as much as I don't like the idea. And I don't like the idea because I don't like the stop placement. Let's go. Let's go. Let's go. Let's go. Looking at the BPR, or that's not BPR, the breakaway gap that we framed. There it is. So this would have been a stop out. And this shows why I don't like the idea of trading like this here. But for the sake that we close above here, I took that buy. So now this is pretty much no man's land, unless we close below the open price here. And if it closes back above this, it's just going to prove why when I'm trading, I don't take trades like this because I can't trust a stop loss being here. So everything here, in my opinion, is a mess unless two things happen. One, we close below this candle's open price, and that I can trust a short here if that happens. Two, it closes back above this to just show why when I see setups like this and I'm trading, I don't think about that. But because it's been going higher, going higher, going higher, playing devil's advocate, I want to show you how setups like this are not the best. It's back above here, so now it's going to potentially keep going. Fun fact though, now that it's swept this I can trust for a stop placement, which is weird, or might be weird, right? What's so different about this and this? This is the retracement that stayed inside and then we pushed again. This swept the retracement. So now the liquidity that would have been here, in my opinion, is already swept. Now, if I'm going to be a buyer, put this over here. I can size up. I don't want to buy below the candle instinctively. And this stop is, oh, I missed it. There. So this now, I'm willing, if I was taking this in a live account, I'd be willing to size up here, given the fact that we closed, we did the stop run, and then trust that TP. But only because I'm following rules, not because I like what's going on. I don't like today. I never liked since the start of the day, and I still don't like it now. I framed two ideas and they both got stopped out. So let's see what this does. Stop size is pretty decent, right? Let's see. 17.06. Yeah, less than 20 points. Should be fine. Should be fine in terms of um how much loss you allow when you're actually trading. And showing a little bit of flexibility for the sake of flexibility's sake. Looking to see them close above the bodies in here. I think this closing above the bodies in here should be what we need to go faster, like this. Highs, old highs, we pop through. I want to see that here. I mean, that should support the idea that we can get higher prices faster. And then once it gets to the liquidity pool, I framed above, I look for a short back down into here, if time allows. Peek at gold for a little bit. Just nothing. Although, where did this hour open? We opened at the hour and then we traded lower, ran liquidity. So that's bearish structure right there. I'll come back in a couple of minutes to see if we are showing willingness to close above this FEG. And then if we are, that could be a scalp. But for now, let's go back to NASDAQ. Wow. So 3 for 3, 3 losses. Pretty heartbreaking. Pretty heartbreaking. Laughing to myself because earlier when this was happening, I was against putting stops in here because I anticipated that this is what it could want to do first. But then I still put trades inside here and then it came back down here. So what did I learn? So this is what chasing a trade looks like for me, because the plan since all of this was to wait for them to come back down to the older highs and then take a buy. But I took two buys inside here and both of them failed. And now I was trying to buy this open, but then I got filled all the way up here. So first things first, the trade size, in my opinion, is okay. The stop size, in my opinion, is okay. But how I went about getting in this trade feels off. Because one, we planned it. We took two trades here and here, and they both got stopped out. So if this was like apart from the size and the fact that the first two were sized down, this is likely where you overthink, or I mean, I know what I'm going to do, but I'm just saying this is likely where you overthink because it starts to feel like you're on both sides of the fence. Why are you looking for this? Why are you looking for this? Why are you switching? Right? But for me, I shouldn't have been in none of those long trades, but I took them nonetheless because when reading price action, rules say you can take trades under these conditions. However, your rules will not predict this part of price action where how do you frame a stop that makes sense outside of I think it's a good area. Processes predict, rules protect. So I sized up on that trade here. The stop loss was pretty okay. But I sized up on this one because this was a stop run. And looking at structure alone, that's a good place to put a stop. But clearly, we were wrong. So, realistically, when this is happening now, after a loss there, if I was in this trade, I'm not interested in keeping my stop all the way down here. That's the first thing. Second thing is, because this is the only buy I should have taken, the fact that the entry presented itself almost flawlessly like this means one, I should be willing or open to scale into the idea. That's the first thing. Second thing is I need to look for the levels from over here and if they're being reclaimed. So ignoring everything here, as price was doing this, the level that we wanted to be claimed would have been 50% of the bag. So as price is trading now, the level you want to see the price reclaim is that 50%, and then scaling in makes sense. Otherwise, you're just chasing whatever price is doing, feeling good whenever it's in your favor, and then not so good when it's not in your favor. So my punishment for missing the entry here is sitting through this mess. Probably could have scaled in here. That's a little bit aggressive, but within the realms of how I trade. Because I was already planning to enter in this candle when this was bullish, thinking we'd close above here, but we didn't. So scaling in now isn't aggressive, it's just stupid because the levels weren't reclaimed. So now we have that bag just being there. We're not closing below it. We're not closing above the 50%. It is 220. See if this M1 closes above, and then buying the second candle or next candle is worth it. Then we need, well, we don't need, but then two wins with size should make up for the loss. So I just want to see it dip a little bit down. There we go. Entry not the best. I think the stop should be the same because this is trading view. So now, in my opinion, we opened here on the 5-minute, went up inside the bag, we dipped down, rejected the open, we closed above EQ. Unless this is consolidating, then there's no business left to do in terms of sell side runs. There's no untapped level. There's no retracement that's not swept. There's no lows sitting in the FEGs because there's no FEGs created in this leg. So I don't see a reason to retrace. So if this was a recording I was doing, this is where I'd start labeling no retracements now. So it's out of the bag, all the way up. And you could just look at the highs on the left and use that for management. So this was the first high. I don't remember what this line is for, so I'm just going to take it off. In terms of trade management, I don't want to use this high to mitigate risk. I don't remember. Well, I think it's 2 5 lots, 2 5 lots, 115 lot, which means the total loss should be around 50 and 50. And then the 15 lot would have been somewhere around 200. So that would mean I'm going to call it 350. I'm going to say $350 would have been the total loss so far. Okay. So full TP. I didn't put a TP. Sorry. I'm bad. Full TP as it is would cover for all of that. But you don't want to get hopeful when you're down on the day and then end up being down more. So I'm going to utilize the approach called running down equity to scale out and manage risk here. So first things first, my stop needs to be close to break even. But I want to use how we trade here to manage that. So little FEG here, it's 223, not that significant. Considering buying the FEG here, we have 7 seconds. Right there. And then once it pops up, I'm thinking of moving my stop all the way up in here. Line in the sun is the 50% of the old bag, of course. It's 224 and it's dropping heavy. So I'd look for at least one candle in the new M5 to trade into it before I think about moving. Or is this going to come back and stop me out? I have 1 more minute. I have 10 seconds at least. Now I don't want the first candle of the M5 coming to dip into here because this went right through. So I don't see the need for this M1 to sweep that low before going higher. So first things first for me now is staying above the open of this M1 candle. That supports the idea. And then I want to pull up my stop. If it starts trading towards this low, by the way, that's not supporting the idea, which is why I'm saying if our FEG is here and then this candle is coming on fast and we close, sorry, like at equilibrium or in the upper portion, a new M5 is coming out and that M5 sweeps that low, then I think that's all fair game. This went right through the FEG. So in my head, I'm not seeing a reason to sweep this low before going higher. So this now is leaning more on I'm probably going to be wrong about the buy idea. But let's see. There are still variations to these 1 minute charts that I haven't seen. Oh, I wanted to check on gold. So gold did get that sweep of the sell side. FEG down here. I'd be anticipating a gold buy setup. But let me get a chance to manage NASDAQ first to control the risk, even though it's a demo. And then I look at gold. Just habits. Okay, so the M5 started here, if we remember. So as this is trading, I'm looking to see how we interact with that open price. This rejected it brutally, and again, not good for what I'm trying to do here. So it's given me an opportunity to scale out if I want to. I'm not scaling out because it didn't close below the equilibrium here, the 50% of the bag. All right, so this went and swept the low that I was saying I didn't want to see. I don't want to see the low get swept again. This just swept it one and it's closing below equilibrium. My stop should be here and I should be willing to walk away from the trade idea if that low is broken. So right now, without thinking, that's where my stop needs to be. And that's a stop out. So nothing but losses today. Just taking a look at the M5 to see if no. Still looks the same. No new information. in hindsight, the moment it rejected this, that's the first sign that I could be wrong, but it is what it is. And gold is dying. Well, on one hand, I'm really, really happy that I chose to not trade live today because the moment I woke up, I didn't like what was happening. On the other hand, I'd want to at least share a winning idea. And so far, every single one has been a loss. But this is just right back where I thought it would be. Not ideal, not in the ideal category. And then again, above this high is a mess. I don't see any sales at liquidity down here at all. I see nothing inside here. A sell side liquidity. The only levels here are levels that you'd use to confirm bearishness, but none of them has been confirmed. So this is still reaching for buy side in my opinion. And the liquidity is where we saw it, all the way up here. But it is just messy. But we got time. We got time. And we have this closing above here again. I'm gonna buy EQ. Put in my stop right below the bag. TP there. Let's see. It's M5 about to close. Ah, This is a battle today. Good Lord. Why is this consolidating in here so much? I mean, I don't know why, but I'm just happy that I'm not trading today. Because this would have been frustrating. I feel like this is a better setup since we closed above here. But gold stop loss placement's a little bit. A little bit tricky sometimes. So I'll leave that and go bust my head on Nasdaq a little bit more. Look at the M5 for a second. Yeah. It's not breaking down. It's pretty much at 50% of this expansion, but it's just consolidating. Wicked consolidation. So for the 1 millionth time, we're back in the bag. And that's a so stop out on gold. This is a better setup than Nasdaq, like by far. What's that? $100. Looking to see. I'll come back to check if it rejects. This is the gap here. Back to Nasdaq. So again, we've closed above the bag. We don't have unlimited capital, but this demo. I'm following the rules. Stop placement here. M5 candle opens here. This is about 15 points. Closer I get to EQ, the lesser the stop will be. So for the 1 millionth time, I don't see any type of sell side liquidity anywhere here for this market to accumulate. So we're trying to long for the millionth time. Is this consolidation over? Oh man. Liquid gold. Everything we touch today is just liquid gold, man. Liquid gold. So thinking out loud, I'll scale into this if we close above the bag and this down candle's high. Three, two, one, no. Crazy. Imagine if gold turns around. No, I'll leave that alone. So let's see. Close above the bag, close above the down candles here. I can scale in. If this comes down to one trade, recovering all the losses, as horrible as that would be, I'll take it. As horrible as that would be, I'll take it. This is a mess. And gold not looking as attractive anymore. It's way below the level. Nasdaq right back where we left her. Old highs, where it didn't give us a chance to run down equity by pushing above. So let's see it come back down. This retracement, I'm actually fine. I'm actually comfortable with this retracement under this circumstance. So for scaling in, I'm thinking about two things. If it gets all the way back to the highs, sure, no problem. Sure, no problem. I'm fine with that. I'm not fine with it going below equilibrium. So trade management, I should wait for this candle to close first to allow for any potential sweeps of its low. But the reaction I'm getting here, I feel like I can trust that. I thought they automatically said it. What's going on here? I don't know what just happened. I thought the TP wasn't set because I saw it here. My bad. But anyway. All right. So I'm looking for new highs. So now I'm less interested in this high over here and more interested in can we break above those. I don't know what the total loss is right now, but I'm gonna assume it's closer to $1,000. So the risk has been reduced significantly on this trade. We're closing above the open price of this candle. If it wicks down to the open price, I'm gonna scale in again. Let's put this over here. It didn't close below it, so I don't want to put the same type of risk on. So I cut down a little, unless it rejects the high and it's just gonna die again and keep it in a big consolidation. But my focus now is getting above this down candle, especially the open. Like a body above the open is beautiful. Last minute of the M5 candle. Is it going to be explosive? Well, no, not this one. It'll be the second one. This is still a consolidating mess. Inside here to here, really. It's been back and forth, back and forth. I never had to trade the PM session every day. Damn. Brutal. Oh, so we have a new M5. Just seen that it's a new M5. My bad. Attention kind of lapsed. Back inside the bag, all the things you don't want to see because I expected these two candles here at the bag high to hold price up, especially after this reaction. But now we're through that, and that's not a good sign. So while this looks good, I'm interested in it getting back above the open and then above this one. Otherwise, it's a mess. What's your question, Tim? I might trade in the PM session. That would be the first question.
Yeah, can you hear me?
Yeah, I can hear you.
Good stuff. Yeah, so I mean, I hope you're good. First of all, thank you for all you're doing. I mean, it's great work. So, I had a question in regards to the AM session. I don't know if maybe you could just go to your hourly. I'd like to point out something.
Hourly chart.
Yep. Yeah. So, um, at that swing low,
Which one?
just above your cursor, just above your cursor.
This one?
Yeah, there. Yeah, there. So that's 8 a.m. So this is something I'm kind of struggling on. Assuming someone is, kind of tape reading or, looking for a setup there, and then of course see that whole week that, it all closes below 50% of that candle. How would you face that? Or maybe how would you look into that and,
Wait,
try
repeat the
to,
question. Repeat the question again.
yeah, can
I
you
heard
hear
when you
me?
said this week. Yeah, I heard when you said this week. I just didn't hear what you said about the week.
Yeah, so looking at that candle, definitely the wick is bigger than the body. And I mean, price later on went bullish. So how can we get this certainty that we can get set up in that section and maybe in that candle
In
and
this
not
specific candle?
from that going forward, I believe.
The closing price right here to this closing
Yeah,
price.
yes.
Put the
How
fib
can
right
we
there.
frame something that
Yeah, I'm telling you,
Oh,
put a
okay.
fib from here to here. If the body was higher than the wick, you put a fib on the entire wick. But if the body is inside the wick, you just fib this. And then you play it there.
Ah,
You've never seen this before?
wait a minute. Okay.
Yeah.
All right. So that's in terms of intraday. And what about scalping? Because I mean, definitely you are a scalper. So what would you do if you were getting, a quick in and out?
Same thing. You go back to 8 a.m. Oh, actually, this was played a little bit different. I'll even show you. This was
Because I kind of
played
froze when I saw that.
with this. So I have to come out of full screen. It's a lot. I know it's a lot. Just bear with me for a second. Let me figure out where is that. So going into 8 o'clock, this is pretty much what the chart looks like. So we had this having, I guess, what's a good way to explain this? Think about everybody who sold here. They have buy stops. All the buy stops that were here, 100% of them are still in the market. All the buy stops that are here, 88% of them are still in the market. All the buy stops that are here, 15% of them are in the market. This is derived through volume, by the way. Volume, not order book or order flow. We don't have that. This is just trading view indicators. Now, down here, vice versa. All the buyers that came in, 100% of the sell side liquidity would have still been here from the buyers. So when the market goes down, bam, right there. When this starts accumulating the sell side liquidity, if we're going to go higher, look at these three levels, 100, 88, 15. Which one would you want to target? 100. You don't want this. Right? Make sense? So then as prices pulling up, that's what you're focused on. You're not focused on this. You're expecting them to run through that high. And then there, right there. Oops, too fast for me to. Right there. You're looking for them to reject that high because it didn't. All the liquidity was not absorbed, and so to speak. Because I'm playing around with volume now, and that's what volume stuff say. All liquidity is not absorbed, so you're expecting lower prices again. Drops down. There's too much stuff to explain on this indicator, but bottom line is we went higher, we swept all the liquidity, reaccumulation, price went higher, we consolidated, dropped down here. So now there's only two pools of liquidity in the market, down here and above here. So the trades I'm looking at right now, even though I'm bearish, I'm looking for them to reach up into here and then get a short. But for some reason, I think that was a stop out again. It's not been as easy as I would like. So back to the M1, we'll get another stop out again. So all the things that I outline as to what would make this a comfortable trade or confirmation is just not getting the love they deserve. Right here, we wanted a close below this for a short. We broke above this. We wanted buys from here. It's just been a mess, to be honest. Just one big mess. So following rules, I'm still playing whatever prints, but as you can see, the long here failed. The long here failed. I think there was another one in here that failed. I don't remember if I took one here, but I probably took one here. Yeah, I took one here and then trailed my stop up, and then that failed. So what to say? It's just one big consolidation today. Gold, I was looking at gold as well. I know gold is clearly bearish. If I check gold and its liquidity as well, I know it's already down here because I checked that this morning. But logical expansions, retracements, liquidity sweeps, not happening. So this is one of the reasons why I have been playing around with volume in the first place. Because when I have a range, right, one of the first things I'm thinking about is range sweeps, breakouts, and you play that direction. So if we sweep the range, CSD, I look for a short. Sweep the low, CSD, I look for a long. Bags through the low, not a good idea to play stuff there, but like the long I took here, I think this was where I took it. I'm looking at this under the impression that we're going to get above the FVG and then higher. I didn't wait for the FVG to get filled, but I played that. You can see how that turned out. This, pretty much the same thing. The range here that this is trading in is clear. Let's take this off. The range this is trading in, clear. But the consolidation environment here is making it next to impossible to walk away with profit. We plan to look long here. I got sucked in, stopped. Sucked in again, stopped. Sucked in again, stopped. But none of the confirmations I want, like here, I think when we were here, when this rejected this, if this is an order block, close above the open and it's gone. It failed, it dropped. Not to play devil's advocate, but look at it. That all we want is a close above this open price and then life is good. Nope, 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 die. We want a close below here to be bearish. None of that. So as horrible as it seems, it's still to some degree behaving. It's just that we're not getting what we want to support the ideas. And I can't even justify this as a short right now. We've been oscillating around this bag so many times, I'm questioning how useful it is right now for anything else in terms of analysis. It's 255, so this is the current M5 open. Previous M5 open would have been here. When you're bullish, you want to see the market close above its M5 opens. It's not doing that. So it's not necessarily that we're fighting price action. It's just that the environment here is clearly consolidating, and all the things that support the idea of you favoring a direction, they're just not printing. Close above this and look, close below this, I look for a short. It's not closing below there. Close above there, I look for a long. Everything else is just structure that we're using to get in. Maybe a little bit too early, but yeah. Wild, wild, wild. Bitcoin would make a good side chick. Bitcoin. So I do have Bitcoin on my list, to be fair, but I use Bitcoin in a little different way. I use it as a money flow index. So what I do is, you know how people use SMT and they're looking at higher highs, higher lows. I'm looking at Bitcoin and indices and gold, and I'm trying to discern where is the money going? Where are investors putting money? Indices, gold, or crypto? And then I play those markets. But right now, I don't know. I don't know what Bitcoin is doing. Bitcoin. Bitcoin liquidity. Yeah, I don't think this is a good area to trade Bitcoin. We're far from all the liquidity. Far from all liquidity. So since I popped up the indicator, basically what this indicator does is it calculates definitions for consolidation. So it's not this box, whatever time this is, 125 to 550, that's not a timed range. The indicator is calculating where consolidations are, and based on my studies with volume profiles, it just plots a volume profile on it, and then that gives me key levels, and then I trade the key levels. But yeah, gold pretty much, rejecting all the key levels here, to be fair. But the liquidity is here, so I was paying more attention to the liquidity. I did put the key level on here, which is the bottom part of these red boxes, but somehow I got lost in looking at that. So that's on me though. That's not on Nasdaq. As horrible as Nasdaq is, that's not her fault. But yeah. So right now, if this starts closing below the level that we had outlined, this is the liquidity pool I'd be looking for. I think my paper trading account has taken quite a lot of damage, and I haven't used it in a very long time. But we're now closing below here. It is 2:59. So 1 minute before the hour. I would be okay looking for a short, but not right now. I'd have to wait until the new M5 comes and it pops up. If not, it's just going to run and then I'm gonna miss the trade. But yeah, still looking at the market maker model type setup that I mentioned earlier, with all of that madness up here and there. But I would want to sell this right in this little FEG right there. So let's make this bigger. Put this on M1. Now this is just scary. This is just very, very scary because this is saying all liquidity here was swept, absorbed, order block. There's a whole lot of selling right here. I'm gonna sell that. Kind of missed the entry. Only thing to be afraid of with this sell here is all the opposing liquidity is up here, but I'm not looking for opposing liquidity. Around, put it up here, and then TP at the lows. Confirm. Probably should have been using this on the 1 minute chart. So this is what happened. This is what I was saying. All the liquidity that I want to pair is up here. Look at that. Good Lord, it's just making a mockery of me today. Absolute mockery. But again, on one hand, I am happy it's doing that because the rules said I shouldn't be trading today, and I stayed out. And then on another hand, I'm like, 1 hour of reading price action and not one winning trade. That's crazy. Now, I'm thinking if it actually comes into this little pool of sell side liquidity here and I sell, is it going to finally go to the other one up there? Crazy. If this was my live account, I'd be cooked today. But to be fair, if it was my live account, I wouldn't be doing much trading in the PM session. 9 years of my strategy running on AI says that my edge fades after 10 a.m. But yeah, let me see if I can get another one. This time I'm desperate. I'll use help. What would be ideal is if when we trade into here, I see a little box pops up that says EXH. When can your AI be your friend? This, the amount of time, effort, and money I put into this, I don't think this will ever be public. It's insane. It's insane how much stuff I had to go through just to build this. But I don't mind sharing it to you, but this code is mine. This code is mine. So, watching this trade up, I'm looking for rejection here. This looks like the order block since the old high was here, and this is the high that this is the candle that closed above it, and we know this blue line is the low end of the value area. But still, I don't want to see them get into the actual liquidity pool. All right, so now we have aggressive buyers stepping in. Based on volume, buyers buying up all the buy side liquidity here because buy side liquidity is just buy stops. All right, so 98% of the volume here is still bearish. They just gobbled up all of that. They just gobbled up all of that. I didn't get the exhaustion tag that says the buyers that are coming in here are being absorbed, so I'm not going to sell that. But man, look at that consolidation plus tax. So if the buyers came in here and they were aggressive, why am I not trying to buy this aggressively like the buyers Why am I not buying this aggressively like the buyers? And then put my stop at the next pool of liquidity, was at 29,660. So this is what it was created for. At highs or lows where I expect reversals, how do I justify the reversals? Because one-sided days are my weaknesses. When you're looking for a sell at a high and it just runs through. And if it drops now and makes a mockery of me, we cry. All that reaccumulation. Why can't I buy again? Why can't I buy again at this gap? Pretty aggressive, right? But the indicator says that aggressive buying volume, the volume here is aggressive buying. And if volume precedes price, aggressive buying at a high should mean a new high, right? Or did I misinterpret all of this? Unless it wants to rebalance, which would be cruel if this rebalances before going higher and takes me out again. Because I think I did make a mistake. If this is the range, I'm essentially buying in premium, but no stress. Whatever the outcome is, it's just data. Because I'll have the recording to run to run through Claude. Claude is my best friend these days. Do you feel like you're done digging market for more understanding? I don't get what more I could reasonably want to understand. I have a very good grasp of timing. I have a very good grasp of price action. Again, the days that I found it difficult to read price is just when the market is one-sided. So unless you are, just tracking higher time frame and committing, and I usually don't because I'm a scalper. One-sided markets are never in my field of view. So with volume, I can play one-sided intraday price action. I just have to employ a little bit more rules to not be silly, which is one of the things I'm saying. This feels like I'm buying in premium of this range from here to here. But it is what it is. But yeah, I'm not looking for anything else. From the market itself. Just automation. Automation. Can you run recordings through Claude? You can upload videos, but it's probably easier to, what's that word now? Transcribe and send screenshots. So from the recording, just take a screenshot of anywhere that you want to analyze. And because it's got like a log of all the indicators I've built and all the theories I've uploaded, we just talk about that. But yeah, another trade, another loss. Yeah, tell you, today's been liquid gold. Liquid gold. This was the funniest one though. The short here and then seconds later it just flew to the moon. But yeah, I have no idea what this is trying to do. Price action is just a mess right now. It's consolidating between here and here. We went outside, then it flew back inside aggressively. We took the highs, everything said continuation, then it dropped back in. So ping pong. Buy at the gap. No, so I think that's what I was saying earlier, that as crazy as it is that I was buying that, which is fine. The fact that I was buying in premium is the only thing that felt a little bit crazy to me. And the idea that they could want to rebalance the gap before before it goes up. If you think about all the, like everywhere I took a trade today, it feels personal. Here, stopped pullback. Here, stopped pullback. I don't remember if I took anything in here. But, stop pullback, stop pullback. I think this one was a trade as well. I think this is where I trailed my stop to down here. And whoosh. Nah, 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 nah. All the mistakes are mine. But to be fair, again, even like maybe you're looking at all the trades and you're like, you're losing every single trade on a call. That's crazy. To me, the mere fact that all my rules said don't trade today, and that's why I've been hammering out 1v1s and replying to DMs. And then I do a live call and I'm getting a whole lot of trades wrong. That to me is a win. It's a win because, if I was trading live, all of these paper trades would have been my actual account, and that wouldn't be very nice. That wouldn't be very nice at all. So there's some light in the darkness. And then there's that old saying, bulls buy low, bears sell high, and then pigs get slaughtered in the middle. And I mean, look at this. This looks like gold H1 chart. You've seen gold H1 chart. Before the sell-off today. Look at this. Look at this. I bought somewhere in here and had lots of fun. And then I think I was long in here as well. Lots of fun. But then we couldn't get above. I'm like, you know what? This is not ideal. Nas H1 is just the usual. Majestic runs up, majestic runs up, majestic runs up. But then this one is such a 15-minute chart. Just a mess, just a mess. So, as ugly as it is what it is. Oncoming trade. The human side wants now. Oh man. The good part about this again is this is just, man. Instinctively, if I was being assessed, like this was a test, and I was asked, what could you have done differently? Looking at this, or if you were in my position, what could we have done differently? Clear bearish expansion, big run up. Clear bearish expansion, big run up. No new lows. It's holding, and it pops up. Okay, it pops up. Are we sweeping? No, we're not. We're stuck inside. So, looking for shorts. We were looking for shorts in here. Confirmation to go short. Nothing. Wait, the highs. Okay. Showing willingness to break out. Nothing. There's nothing I would have done differently here, to be fair, because this is just not ideal. I am seeing how, this is a down move here, was very nice and helped price and all that good stuff. But At the end of the day, it's still a consolidation. And outside of, I think there's only one thing I could have done differently, and it would have been the first time price traded here. I could have taken something off here, which is what I was trying to say. Running down equity would be ideal, but I didn't get the. While this was an opportunity, you know, I was more thinking this is the high, hit the high, pull back, new high, trim. But then that took me out instead. So yeah, one big consolidation. NQ just runs. So you guys know that I've been actively avoiding Nasdaq because this is crazy. This is crazy. And crazy, not crazy in the sense that why did you not see this and it was so obvious? Crazy in the sense that um, buying and hoping for new highs is crazy. And looking for shorts on logical things, we're just not getting a confirmation and it's screaming higher. So if you're a full-time trader, there's a decision you have to make. That decision is, am I going to continue to let Nasdaq take me for a fool and have me feel like, I need to scream into the microphone or something like that? No, we go over to gold. And for the most part, gold has been pretty standard. Today was a breakdown, but no big deal. But all the other days, look at this. Look at Dow Jones. This looks cleaner than Nasdaq. This looks cleaner than Nasdaq. From a liquidity perspective, take that off. Bam. Remove drawings. I don't think this is such a bad thing. And if you have been playing around in volume profiles, which I think you should, if this was set to a range, right? Let's say this was not being done automatically, and I set it to let's say this low to this high. Right? Let's just say for argument's sake. The information this would be saying is the bulk of the orders or the volume then, because orders are not this visible through TradingView, right? You know that. The bulk of the transactions in terms of volume that took place happened inside here and here. Right there and there. And then volume profile 101 says if prices closing above there, higher prices. If it's closing below here, lower prices. So it closed above, came back inside the range. At this point, the range would have been the range of where the bulk of the transactions took place. So inside there. So pretty standard. We would have broken outside the range, came back to EQ. So now this is like textbook. Range, breakout, EQ, new highs, right? That's a drawn liquidity. But then look at the delivery. It's back to here, which is an old level, in case you didn't have the indicator on. You'd be trying to make sense of all of this. Like, why is it failing? Why is it consolidating? We don't know. We don't know. But for the most part, it's just a mess. That's all I can say. It is a mess. And now, not only is this high from a price action standpoint, housing liquidity to make a new high in the fractal, we have all this outside liquidity above us. So why is an idea to buy and target that suffering so much heat? Is it the strategy? Is it the idea? Is it the trader? No, it's the market condition. It's the time of day. I mean, And again, I'm looking at this and I cannot see any reason to not be a buyer here. It's crazy. I cannot see a reason to not be buying this. That to me is the craziest thing. Like I don't see anything here. We know that he who pushes too hard loses more. Other thing is a joke. Man, is this one of those cases where, so see, even that high that we drew from the um M5 and M1 is showing a whole lot of liquidity right there. Just a whole lot of liquidity. So maybe this is one of those things where um day traders suffer because what it takes to win here is just buy and trust that a stop loss all the way down here protects you, which is wild. Didn't that click confirm? Oops, my bad. Where did the hour start? Like all I'm seeing here is buy, 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 buy. Probably only the stop loss placement could have been there. But this is just all buys. I can't see a sell setup here. And it's still, despite all of that, it's still dropping. What do you do? Imagine this wicks me out and then pulls back. Absolutely crazy. uh, nah. Like I said, on one hand, like I'm genuinely cool inside to know that a day when like I've been trading all week, and this morning when I woke up, I checked the charts. Everything said today is a no trade day, and then look at it. The day when I chose when I my process says not to trade is a day where I read about 15 setups wrong. 15 trades we took about that, and they were all wrong. I have to be happy about that. Absolutely. Like again, looking at this, I cannot see a sell setup here. I just can't. I can't see a sell setup. Absolutely nothing here. Like this is another buy setup right now. We had a run on stops. We're closing above. FVG is there. We close above 50% of the FVG. Early confirmation. Wick down, buy. For the millionth time, we buy. Logical stop loss. Stops are not even that like outrageous. Everything is within reason. What happens? Like only the precision on this, the entry could have been a little bit better, but it shouldn't matter. Did the market just freeze? Oh, there it is. It starts to move again. Crazy, right? Like I'm looking at it, I'm like, yo, a day like this would have crushed me, like absolutely crushed me. My gosh. Wait a minute. Did I just see this turn another black candle even though we're above the open? I hope it was my eyes. What I should be doing is to go and get my steps in and leave this horrible market alone before Nasdaq has me rethink my career choices, which is what most persons do almost every day, right? Almost every day you think about it. Why did I hear that 95% of traders lose and then say, this is what I want to do? That right there is what I want to do. Shed us some light on the process so that we can stay out coach. Okay. I'll tell you why I stayed out of gold oil chart. No, I don't want to trouble this. I'll keep the indicators off. I'll go to the other chart. So again, I look at something that I've coined and calling it the money flow, right? Basically, where is the money moving in the market? Almost never is every asset going to be bullish at the same time, because we don't have infinite money and the investors don't have infinite money. So some asset usually is accumulating all the money while another one is suffering. Usually it's between stocks and gold. So if you remember, back when trading was not stupid, you could buy gold and sell Nasdaq and make money. But with whatever is happening now, there was about 2 weeks where you had to just buy gold and buy Nas, and you'd make money on both. So looking intraday, not necessarily on the higher time frame, looking intraday, there are a couple of things that you can use. One, the hourly chart. When you're looking at the hourly chart, zoom into this. We have open price of the month of the week. Market opens down, goes up, comes back. So basic stuff, right? No overthinking, basic. That's the range. We swept sell side liquidity. If we're bullish, what's the next thing that the market should do? Expand above the open, expand above EQ, make a new high. Simple. Simple. We swept, we went up, we failed. So the day started, I'll just tell you, I looked at the charts around about 6 a.m. Somewhere between 6 and 7, because that's usually when I'm up. And I'm looking at this and I'm saying, this direction is not clear. This is not clearly bullish. Even though we're above the open, we're not showing expansion above that. So this is not clearly bullish. It's not clearly bearish either, because we're still inside that portion of the low. So I don't want to trade that. I want to allow for the morning session at least to expand and close above here or break down below here, and life is good. Nothing. Same on Nasdaq. Open price of the week. Right? We open, we trade lower. So between that push when we open up and then the extreme, that's what we did. Simple 1, 2, 3. There is no high on the left of that box. None. So we open. I'll go 6 a.m. today. Here's the box. We open, we're above that, we come back down, we're resting on top of that. Right here at this point in time, direction is not overwhelmingly clear. It's not overwhelmingly bullish because it's literally at the range high. It could break down, trade lower, or it could resist like it did here and then go higher. But I'm not trying to commit to this without knowing if the direction is higher or lower. So the two pairs I trade, this is saying direction is not clear. This is saying direction is not clear. At the very least, you want to allow the morning session to do something and then make a decision. Morning session came in, closed below the open price. Cool. Bearish. Popped up, short. This is tradable. No problem. Morning session came in, popped up, cool, bullish. Now this is tradable. But right here, I had nothing to do. So when I popped up back in the afternoon and said I could do a PM tape reading, I literally just woke up. I'm not trying to sit for 8 hours at a chart that's not clear and make a decision like that. Nope. So now if you look at like a lower time frame, I try to sync my routine or my life with how I trade. So here is 6 a.m. Same thing. This is the same thing like we did on the early chart. We open, we push, that's the extreme. There it is. So potential trades around there. I didn't trade that, just to say. Right? But same thing. Gold, same thing. Grab the open, 6. First swing. There's that push. High to low. There's that range. Push this over to the left of 6 o'clock. There it is. So if I was, adamant about trading, there are trades that are possible. So you can navigate this. It's just that sometimes why force it? Sometimes it doesn't matter how clean this looks in hindsight. You have to be strong enough to say, it's just not an ideal day, so I'm just not going to trade. All of this looks like perfection, right? All that pop-up up candle with displays, FEG, short at EQ, all of it is beautiful. Or it comes back, it rejects the low, we have an up candle with CSD. That's a beautiful short. But what if it didn't play out? Would you blame the setup? Or would you say, today wasn't ideal, I took a trade and it worked out or it didn't? Yeah, that's pretty much where I'm at now in my development. If it's a mess to me, I just relax. But yeah, I was expecting this to be a lot smoother. A lot smoother, man. Where's that 1 minute? I took it on a 1 minute chart. Look at that. Now everything here just makes sense, right? This is what, on the hour? So pretty much here's the hour. So we open, we push up. This would have been the first peak after that. So then this would have been your range. Open price is somewhere around here. We're just consolidating around the open price now. That's not terribly one-sided. But from a bias standpoint, this is bullish. But it's not the easiest bullish setup. So what do you do? Can the day be ideal if you can't trade? Can the day be ideal if you can't trade? There's many ways to interpret that question. Remember, there are people with less than half the skill that you have who are making money from trading. And people who just look at the moving average and say, oh, the moving average is doing that, let me sell. And then they sell. There are people who are saying NASDAQ is going to make all-time highs every time. And they're buying lows, buying lows, buying lows. What you have to understand about the different types of traders is they manage risk a little bit different. Most of the guys who are buying here, their stops are down here. So, yeah. But yeah, if this stops me out, then there's absolutely nothing more I can anticipate from this price action. It's just a mess. On the bright side, I guess you get to see a whole lot of losing trades from me. Every single one was a losing trade so far. So we can all get it wrong sometimes. Don't need to be shy about it. Just don't suffer in silence. She's reaching for the stop. And she took it. So let's see how this M5 candle closes, and then I'll decide if this is worth my time. Yeah, this does look like it wants to stop. And it's almost at the end of the day, so no need to anticipate any further. So I'm gonna choose to stop here, guys. I'll check what it does around about Asia, see what's happening. But as of right now, this is again not ideal. If you have some time, can I ask about stocks, the fair value of the stock to buy from? I think we talked about that, didn't we? Talk about that in DMs. Um, this is how I pick stocks. I grab a daily chart. Uh, pick any stock. I don't know. I don't trade American stocks. Give me a name. Give me a stock name so I can do that and then wrap up this quickly. PayPal. So value area, you grab. This is the most obvious range, right? You go like that. PayPal is discounted, so we have ideal price to buy PayPal now. If you're applying technical analysis, then between here and these lows is an imbalance. So I'll just put a line there and then zone in on the imbalance. Down candle bodies, there. That's the imbalance. So if I was planning to trade PayPal, I'd be looking to get in somewhere here for that. See? That's how we do it. If something happens and it like gaps down or gets down here, and then I would just grab more. And if I'm trying to identify like a price for that, just find equilibrium of this range. I wouldn't expect it to be that deep, but I'm just saying, to be thorough, anywhere in here If you're looking to hold long term, then you're targeting 52. But PayPal is steadily falling. I don't know if there's anything um, driving the potential for a higher price. Earnings, management structure. Yeah, but that's all. That's literally how you do it. And again, as you get used to volume profiles, if you feel like you want to high to low of the range, look for participation, you can see that this is equilibrium is also the peak price or the price where most participation took place. This is the air quotes for interpretation. This is the largest buy order. So anywhere between this, which looks like the open of the candle. So this is the open of the down candle. Let me adjust that, and I'll show you. Um, two lines. Anywhere between, well, not open. I think it would have been it's a down candle sort of. Anywhere in here would be an ideal area to focus on along for educational purposes only. I mean, yeah, and look for that. That would be my objective if I was playing PayPal. And you can see how there's one down candle, one up candle, and all of these just resting above the highs. So this should be like fair value then. All of this here, this is like the most discounted price I would expect from PayPal, with all things being equal. Unless something crazy comes out that says something, I think buying inside anywhere here and just holding is what we want to do. But again, I don't know if there's anything driving higher valuation for PayPal. So if you're doing this, it's more of a positional trade where you're waiting for that higher price. Set an alert. Set an alert for both prices here and just play when it gets there. So hope that was helpful. Tomorrow is Friday. I should be able to squeeze in another PM session reading. And we can. I'm going to try to make this a thing where I squeeze in maybe a little bit earlier to avoid the consolidation. So maybe noon to 2 p.m. my time, which would have been like 1 to 3. Maybe not the full 2 hours, but at least an hour in there. We'll do some PM session, tape reading and trading if possible. So thank you guys for coming out. I'll see you tomorrow. I'll post the call on YouTube and as soon as it's done. All right, guys, enjoy the rest of your day.